Hello friends, hello professionals, and welcome back to my channel, The Sea of Regulation. Simone here, and I'm back with a video. This video is going to touch on some due diligence that you might not be doing, and you probably should. Now, it fits into AML CFT measures, but how many people actually know what KYE is? Before I dive into this content, let me get my usual disclaimers out of the way. I am a financial services regulator. I am not a lawyer, and I'm not a professional advisor. So these are definitely my views and not the views of any regulatory authority or international standard setter. Now with that out of the way, let's dive in. So KYE, it's short for Know Your Employees. We tend to vet people when they're coming in for a job. You know, you ask for their resume, you do background checks, you ask for their references, and dependent on where you touch, you might even check for a criminal record. For regulated persons, that's actually a requirement. We need to see a police clearance certificate or evidence of their background as it relates to any crimes or offenses or activities. But if you're not a regulated person, so you're not seeking to be approved by a regulatory authority as a director or as a senior manager, a compliance officer, or a number of other roles, then that might not be something that your employer requires. And let me just be straight, I'm not saying it's required in all cases, but it's important to understand who you're hiring into your firm because you might be opening yourselves to a risk from within. And I'm going to touch on the fact that this is not just for financial services a little later down, but let's focus on this. So know your employees. You bring in an employee. They've been a loyal and diligent employee. They've been working very hard, and you pay them a particular salary. And one of the things that you may notice is that over the years, their lifestyle doesn't match the salary that you pay them. Are they embezzling money from you? Are they committing a fraud or other financial crimes or other crimes outside of the job that could put your firm at risk? Or maybe they just married rich and they're living a really good lifestyle. That's a possibility too. But it's important to know the background of your employees and over time as things change. We're really good in relation to onboarding an employee, but not necessarily over the life of their employment with a firm. So it's important to do those background checks, especially when you have your HR procedures. Those HR procedures actually need to be vetted by your compliance officer. Now, that might sound a bit controversial, but I can assure you, there have been cases where employees call in sick and the HR just notes it as a sick day, but what has happened is that they were arrested in a different country, drug smuggling, some sort of activity, but because the firm's compliance officer had robust internal checks and screenings, not only on the clients, but on the staff, they were able to pick that up, and then you were able to do something about that. And it may sound far-fetched, but that has happened and does happen. And not just drug trafficking. It could be a number of other crimes that are being committed. And the question is, do you want someone like that in your firm? It's important to know who you hire. Now, taking it a step further, when you have that employee who is working diligently and very hard, sometimes firms put the incentives in the wrong place. And what happens is that you end up turning very good employees into employees who either don't care or who are willing to work with the system and toe the line as it regards to legality in committing certain things. So for example, you have a particular account opening requirement. Each staff has to open 10 accounts per month. That's doable based on your population. And you figure this is going great, I'm going to up it to 100. That might not be practical. And they may try to comply, and guess what? They are realizing that that number is unattainable, but for Susie or Johnny, they've fudged the numbers or they've done things illegally. And this is an issue of misconduct when you force people into predatory practices in terms of opening an account to meet targets. What happens then is that you might have a higher account closure rate, which is its own problem, but you're incentivizing the wrong thing. and Susie or Johnny, who was willing to do the job to the best of their ability but not engage in predatory practices, are now willing to do that because guess what? They've seen others who have done it getting bonuses and they're not. And as an extension, I can tell you from those type of incentives, your compliance tends to start going down the toilet. So again, don't have systems in place that change your employees from good employees, from compliant employees to the dark side. You don't want to do that. Now, going on to the employee element, one of the areas that I want to touch on that isn't financial services, but now is impacting a lot of financial services is your employees within telecommunications companies. Now, this is a channel that speaks about financial services regulation, right? So financial services, banks and insurance companies and investment houses and trust and corporate services providers and all the other DNFBPs. Why am I talking about a telecommunications company? Well, there's something called a SIM swap. And what happens is that telecommunication companies tend to have sometimes higher turnover rates. So if you are a Flow, a Digicel, Orange, AT&T, T-Mobile, Vodafone, wherever you are in the world and you're a telecommunications company, this financial services regulator is telling you you need to conduct know your employee due diligence in a real way because SIM swaps are happening. And what does that impact? Your two-factor authentication for access to your banking. So they get into a firm, they work there for a while, and they're like a sleeper. So a sleeper agent, and when they're activated, they execute a number of SIM swaps on unsuspecting customers of yours and allow criminals to gain access to their bank accounts, their financial records. If you have a cryptocurrency account with an exchange and you have that on the platform and you use your phone for two-factor authentication, that's a point of failure. And we actually need everyone on board to help with ensuring that we reduce financial crimes. So again, you have to assess your employees. Why do they want a job? Is this person really well qualified but just wants to work in customer relations? They don't want to be a manager? Why is that? Why would they take a lower paying job when they're clearly qualified for a higher paying job? That's another thing. Now, in terms of knowing your employees in any firm, financial services or otherwise, I can tell you one of the risk indicators that you may be overlooking when it comes to your employees. Do you have an employee that doesn't take vacation? Now, firms have introduced the requirement for employees to take vacation and reduce the amount of vacation days that can roll over in any given year. And in some countries, people are really good about taking their vacation. In fact, they're taking all of their vacation. They're leaving nothing on the table. And I'd like to take my vacation. There's lots going on in the world. I might need to de-stress. But if you have an employee who doesn't take vacation and who's happy to lose their vacation days, because if you can't roll them over, in most cases, or staff will lose them, that is a risk indicator. What is it that they do not want to leave the office for an extended period of time for you to detect? That is a risk indicator that you might need to pay attention to some of your employees a little more than you may have been doing in the past. Now, guys, there's more that I can say in relation to knowing your employees, but again, look to see whether their lifestyle doesn't match what is expected. And again, it's not that I can't be a clerk and living the good life, because I could come from a very well-to-do family, or I could have married rich, or I could have come into an inheritance. All of those things are rational reasons for someone coming into wealth, but it's the unexplained wealth that's an issue. And you need to be able to identify when you hit those triggers to make sure that that person isn't engaged in criminal activity, including probably within your firm, like embezzlement or extortion or fraud or something that they're doing. If you have a company that gives licenses for certain activities, is it that they've given themselves a license to operate as an agent under your company without you knowing and taking the profits for themselves? That happens. So again, it's important to know your employees in terms of what is expected for them. It's also important to understand that in a crisis, like what we're having now around the planet, you may have persons who are more qualified than the roles than they're seeking, but in certain firms, that is a red flag as well. So you need to be looking at it. Some firms think, boy, I just hit the jackpot. I got this PhD or this double master student who's willing to come in and just be, you know, a client relationship officer at, you know, the first level, and I'm going to get them and they've agreed to take this low pay and all will be fine. Is it that they're gathering their own intelligence to commit financial crimes later on? Because access to information in of itself can present opportunities for financial criminals. And lastly, again, telecommunications firms, you might not feel that you're within the line of fire for financial services regulators, and as it relates to a straight line, you're not. But when it comes to financial investigations and investigations of financial crimes, that SIM swap issue is a big one. And I think more controls need to be put in place to prevent that particular issue from cropping up as often as it does. Now, again, there are a number of things that I could speak to, and if you can think of anything else that you want me to touch on in relation to knowing your employees, definitely drop it in the comments below. It's really important for us to understand that sometimes we let the risks into our organizations and not necessarily address them as well as we do as the risks that lie outside. So if you found this helpful, hit the like button. If you found it insightful, or if you have any friends in telecommunications, definitely share it with them. Share it with 5 of your friends, in fact, because I think that this particular video might be insightful for people who are not even in financial services. Hit the notification bell so you get my future videos, and I'll definitely be back with some more content. I'll see you on the next one.